Hey everybody, Smart Silver Stacker here. We just got the inflation numbers for March this morning, and they came in at 8.5%. Now that's the biggest move up in consumer prices since 1981. And of course, if we were to use the old methodology, the old CPI formula that they were using back in 1981, we would see that today's levels of inflation are actually much higher than they were back then. This is probably the highest inflation that we've had yet, at least since 1971, since the adoption of the fiat standard and the abandonment of gold backing for the US dollar. And of course, this is all because of the expansion of the money supply. Although I'm sure we will be hearing what the newest round of scapegoats is. It's just a month ago that President Biden was implicating that Putin and the war in Russia was the cause of all the inflation that we're experiencing. Never mind the fact that inflation was already moving up at a pretty good tick before that February 24th invasion kicked off. And of course, I'm sure that the sanctions that we've levied against Russia and the interruptions in supply of certain goods from them, like fertilizers and food, I'm sure that some of that is manifesting itself in this higher CPI, but that's not the only cause. Gold, it did have a little bit of a move up today. Gold and silver both did. But if you look at this one-year chart, you can see that gold hasn't really moved up a tremendous amount. Compared to a year ago, it is a bit higher. It's about $200 higher than it was a year ago. And of course, if you look at the 5-year chart, you can see that really over 5 years, it has moved up at a pretty good pace. Back 5 years ago, it was in the $1,200 level, and now it's near $2,000. So that is a pretty sizable move up. Silver, kind of the same story. If you look at the 1-year chart, we're actually below where we were a year ago in terms of the silver price. If you look at the 5-year chart here, you can see we are about $9 higher than we were 5 years ago. So it's not like silver hasn't moved up to keep pace with inflation, but over the past year or two, it really has kind of stagnated. I get a lot of comments from viewers, and I don't know if they're just from troll farms or from genuine viewers, telling me that the fact that silver and gold have kind of languished over the past year or two, that this is a reason that they are not really inflation hedges. They've demonstrated that they don't really hedge against inflation. Well, silver and gold really are inflation hedges. They're an excellent vehicle for preserving purchasing power. If we look at inflations historically, for example, the German Weimar hyperinflation, you can see here this is a chart of one gold mark in paper marks. And, it's interesting. This happened basically 100 years ago. If you look at their chart from 1918 to 1923 of the value of gold in marks, even though inflation was building for a long time, it really didn't take off until mid-1922. Until then, it was kind of a much more slow and measured move upward. But you can see once it did begin the big move up, it went off completely hyperbolic. It may take a while for inflation to really get gold and silver moving, although I do think that time is approaching. When you have all this fiat money creation and you have high inflation, all assets are not affected by it equally at the same time. Gold and silver, I think, have lagged inflation considerably over the past year or two. To me, that doesn't necessarily mean that gold and silver are not inflation hedges. It just means they're on sale right now and they're a good deal considering that inflation is likely to continue moving higher. I suppose if you think that Jerome Powell's correct and they'll be able to get inflation under control, then gold and silver might be something to avoid. But to me, the low prices in gold and silver right now are an opportunity. And, there are other potential reasons that gold and silver haven't really taken off yet. Some of that could be manipulation. If we look at usdebtclock.org here, we can see that the paper to silver ratio right now is 328 to 1. And what that is basically the number of paper ounces of silver that are traded on world commodity markets compared to the annual silver production. And the annual silver production is about 800 million ounces. I think it's actually a little bit higher than that. But if we go to the calculator here and we just multiply 800 million by 328, we can see that that means that there's basically 262 billion paper ounces of silver traded. And that far exceeds the above ground supply of silver because they're mining about 800 million ounces of silver every year, but a lot of that gets used up by industry. Maybe there's a few billion ounces. I don't have the numbers in front of me at the moment, but it's nowhere near 262 billion ounces of silver above ground. There's a lot of paper silver being shuffled around, and that absolutely can affect the price of silver. It could be blatant manipulation, who knows. We do know that manipulation does occur in the silver market. Back in 2020, JP Morgan was forced to pay $920 million for manipulating the precious metals markets. And this is from Reuters. This is not some tinfoil hat conspiracy theory. This is just the news. So we know that some manipulation occurs, and the fact that it's from JP Morgan is pretty interesting, and I want to talk about that more here in just a minute. But first, I do want to mention that today's video is brought to you by Silver Botanicals, personal care and household products that utilize the power of nano silver. So if you want to check out some of their awesome products, head over to silverbotanicals.com, and don't forget to use coupon code STACKER to save 10% on your order. Now, I was mentioning that JP Morgan was kind of an interesting entity to be involved in silver manipulation and precious metals manipulation. And one of the reasons for that, this is from this website about.ag, and it's the who's who of the SLV ETF. So when it comes to paper silver, the SLV ETF is probably one of the most popular vehicles for trading paper silver. And the custodian of that is JP Morgan Chase. And essentially what that means is they are the ones responsible for holding the silver that is deposited for the account. So the silver that backs up the SLV ETF, the paper silver, all that silver is held by JP Morgan. And we know they're so trustworthy when it comes to precious metals. So trustworthy, in fact, that just 2 years ago, they had to pay almost $1 billion in fines for manipulating that market. So, I'm not sure exactly what that tells you, but it does indicate that there's some funny business going on in the paper markets, in my opinion. And we know that the paper metal markets are rigged. Just a couple weeks ago, we saw that short squeeze in nickel. And what did the LME do, the London Metals Exchange? They just shut the whole thing down to save that Chinese billionaire who was shorting nickel and got caught with a massive short squeeze. Rather than let him go bankrupt, they just stopped the whole thing. I think that there may be a day coming in silver when a similar thing happens. There very well could be a silver short squeeze. I think that short squeeze in nickel shows that such a thing is possible. And if we get a big move up in the price of silver, who knows? Maybe they'll shut down silver trading. It's not outside of the realm of possibilities, as we have seen. And if that does happen, you definitely want to have your hands on some physical metal. You don't want to just be in paper silver, because they might be able to stop paper trading of silver, but they cannot shut down your physical position. That's the great thing about physical silver bullion: no counterparty risk. No one out there can stop you from controlling your own silver. Kind of like what's going on with Russia right now. We're finding out that we can't control what they do with their gold, despite our best efforts. Gold doesn't have any counterparty risk either. It's a currency without a nation. It's money without a nation. And, another reason I think that silver and gold have not moved up is because there is a concerted public campaign to convince everyone that this inflation is transitory and that it's brought on by these scapegoat things, supply chain disruptions, the Russian invasion. And, it sounds kind of kooky, but whoever is behind that campaign, I expect it's basically central banks and governments who like to be able to inflate things a lot, inflate the currency supply. They've actually changed the definition of the word inflation over the past 50 years. If you Google inflation, this is what you get: the action of inflating something or the condition of being inflated, or in economics, a general increase in prices and fall in the purchasing value of money. And that is a very convenient definition for the powers that be, because it doesn't attribute any cause to the increase in price. So it kind of leaves the door open for scapegoats. You can attribute the increase in prices to whatever you want. But if you go back to a dictionary from 1971, there is a subtle difference in the definition of inflation. And it is subtle, but it's very important. So here's the definition from 1971: sharp increase in amount of money and credit causing advances in the price level. And of course, this is the accurate definition, because you can't inflate prices. Prices move up and down. It's where a buyer and a seller agree to make an exchange. But what you can inflate is the money supply. Inflating something's like blowing it up, making it bigger, like you inflate a balloon. You can't inflate prices, but you can inflate the money supply. You can make it larger. And that is what inflation really is. And the increase in prices is a side effect of the inflation. It's caused by there being a larger money supply, and therefore each unit of currency in the money supply has less purchasing power. It's like if you cut up a piece of pizza into 10 slices, well, if you cut it up into 20 slices, now you don't have more pizza, you just have less pizza in each slice. And that is how inflation works. And, it's not just inflation. Some other news we've been getting, this was a couple days ago, U.S. consumer debt jumped by $40 billion in February. So not only are prices increasing, but now consumer debt is moving up to record high levels. And I suspect that a lot of this has to do with the fact that because prices are moving up for things like food and gas, US consumers are having to rely more on credit cards and debt to simply meet their monthly needs for basic goods. This is kind of a dangerous trend. I do suspect that we probably will be seeing more bailouts, not just for the government, not just for companies, but probably some for US consumers, because things are going to get so bad. If inflation keeps moving up this way, that is going to lead to more unrest, the kind we've been seeing, for example, in Peru and around the world. We might see that come to a city near you soon here in the US. And I do think that probably the answer to that will just be bailouts for consumers. And we can see that there's a crisis brewing in consumer debt. Here's a story from the Wall Street Journal. Interest rates on bonds that are backed up by consumer debt are now moving up to levels that they haven't been at since mid-2020. So investors are starting to get more cautious about this debt, and rightfully so, because I think it is increasingly unlikely that this consumer debt will get paid back as consumers are pinched by both inflation and rising interest rates, to the extent that interest rates actually do move up moving forward. And, what will those bailouts to consumers look like? Well, I suspect that they will probably coincide with the implementation of one of these central bank digital currencies. Here's a headline that we got just today. A financial services company, DTCC, is working with Digital Dollar Project on a CBDC prototype. And this comes a couple of weeks after Joe Biden signed that executive order that was directing the Treasury Department and the Federal Reserve to look into the potential of a CBDC. This thing is called Project Lithium. And DTCC is the Depository Trust and Clearing Corporation. They're one of the biggest financial services providers in the nation. They're working on a prototype of the digital dollar. So I would expect that whenever we get our next financial crisis, whether it be a stock market crash or a real estate crash or a spike up in interest rates, the Fed is going to stop all of this nonsense about, raising rates. They're going to completely reverse course, and they're going to open the floodgates of currency, and we're going to see more stimulus payments directly to consumers. Of course, this time they're going to be doing this against a backdrop of already very high inflation. That's going to make inflation a lot worse. I don't think inflation's going to get reined in anytime soon. The Fed's raising interest rates now. Maybe at some point this year we'll see a little tick down in the CPI, but I don't think that that will last for very long if it does occur. And I'm not so convinced it'll occur at all. I think what's more likely is that, as the Fed starts to raise interest rates moving forward, they are going to trigger some kind of a crisis, some kind of a crash in equities or real estate or something like that. And that's going to be it. They're going to have to reverse course. And, they'll find some kind of a scapegoat or some kind of an excuse for doing it. Who knows what that'll be. That could be the event that triggers that big move up in gold and silver like we saw in that chart from Weimar, Germany. I think that the move up in precious metals is going to happen very slowly, very regularly until it doesn't. And then it's going to be a hyperbolic moonshot kind of move. And before that happens, you want to get your hands on some physical metal. Of course, not financial advice. I'm not a financial advisor. I'm just a guy on YouTube. But let me know what you think about that in the comments down below. And if you like this video, check out the videos that are popping up on your screen right now, and I will catch you next time. Thank you all very much for watching. Smart Silver Stacker, out.